So we talked about different types of traders. Okay, we've talked about the scalping trader, right? The scalping trader. The scalping trader is a trader who wants to take 10, 15 pips and is out of the market. And he does that multiple times a day. Okay, he does that several times a day with maybe one or two instruments, one or two pairs, right? That's a scalper, a scalping trader. Okay, now you have the day trader. The day trader typically trades within a day, right? It typically enters a trade and closes his trade within the space of 24 hours. All right, so he could enter a trade now, and then he sees he could enter a trade in the morning, and in 2 hours and 3 hours he has closed the trade. He probably picks 50 pips, 70 pips, 100 pips, and so on and so forth. But the definition of a trader, of a day trader, is someone who typically takes his position within a day and he closes the trade at about within that same day. Right. So, of course, within a day, there is an amount of pips that you can target to get. Okay, you can't target 300 pips on currencies within a day. Okay, so there's a realistic target that you're going to be looking for in a day. If you're a day trader, you're looking to catch 30 pips, 50 pips, 100 pips, depending on that instrument and what's happening in the market per time. So you don't necessarily come into the market and say, well, this is how much I'm going to make today, right? So many traders have that thing where they come into the market and they say, oh, they see trading as a business that makes you money every day, right? But that's correct. It's not like trading cannot make you money every day, but you should not have a target to make money every day. Why is that? The reason that is not very that could be counterproductive for you is because your setups may take time to happen. You may enter the market today, or maybe it's at the beginning of the week, and you don't see a setup that is good enough for you till Wednesday. But if you have already told yourself, that you're supposed to be earning money every day, trading is a daily money income thing, then you find out that you are putting yourself under pressure to make money when you could just hold on and wait for your setup to play out. So what determines what you do in the market is your plan, your trading plan, your setup. Your trading setup, your trading strategy. It's your trading setup and your trading strategy that tells you when to trade. It's not you that tells your trading strategy what to do. And it is not you that tells you can set your target and say, okay, this is how much pips I want to catch. But there is no guarantee that the market is going to give you that number of pips. 1 minute, guys. There is no guarantee that the market is going to give you the amount of pips that you set out to catch. Okay, so there are times where you might set a take profit for a certain point in the market, and then you have to take profit before that time because the market probably is changing direction. So you thought the market was going to keep falling, and then somewhere along the line it changes direction. It happens. Okay, so those are the things. But basically, it's a day trader is someone who would take and close his trade within the course of the span of one single day. Then we talked about a swing trader. A swing trader is someone whose trades will typically last for days and probably weeks. Okay, days or probably weeks. You could have a trade running and the trade is running, you understand the market and you are looking to catch 500 pips, 300 pips, 600 pips, and the trade is running for 2 weeks. The trade is running for 3 weeks, right? So it depends, whichever one you decide to be, depends, like I said, through those classes, it depends on the personality that you have. It depends on the personality that you have. You have the kind of person who wants to see money now. Maybe you want to be a scalper or a day trader. If you're somebody who has the patience and you're like, okay, I want to multiply my money, because if you're going to catch 600 pips, 500 pips, that means you can literally triple, quadruple your money on one particular trade. But it doesn't happen overnight. It doesn't happen in one day. It could happen over the course of a couple of weeks when you leave your trade running for a long time. You see, so it depends on your personality. What is it that resonates with you the most? Okay. So all of that is what we've gone through in our previous classes. And then what I wanted to do today is I wanted to do some analysis for us to understand. I wanted to come on this chart today and analyze the chart a little bit so that we understand what exactly we could do, what you could personally do on your trade. Okay. So I will just discuss probably I will discuss one particular strategy. And then remember, there's something I've always said on the class, and I've always said, when you are trading, you need to always pick one or two instruments that you're going to trade. One or two instruments that you are going to trade. Okay. Now that one or two instruments you are going to trade, you are going to have to pick them, and you will take the time to master them, master how they work, master how they move. Okay. If you decide, there are some people that trade only gold. There are people that trade only NASDAQ. I personally don't trade gold. I don't trade NASDAQ. I have one instrument that I trade, one particular instrument that I trade. I don't trade more than one. And the truth is that not that I could trade more than one, I could actually trade. You can see all these instruments are here. You have Euro, USD, JPY, you have GBP, USD, Euro, BTC, all of them. I could actually trade all of them. But I just decided that I am the kind of person, my kind of person is the kind of person that likes to concentrate on one thing, right? So that's what it is. I like to concentrate. I like to know how one thing works very well. And one thing you have to understand, guys, as traders, you don't need so many different instruments to make money. You don't need, it's a myth that you need to trade this, that, you need to take so many different trades in a day to make money. It's a myth, it's not true. There are sometimes you enter one trade and you make money, and you enter another one, you lose the profit that you just made. Because you got the analysis of one right, you didn't get the other one right. And then you made a mistake, you made money on the first one, then you lost it on the second one. So when you know one or two instruments very well, and you decide that this is what I'm going to trade day in and day out, week in, week out, you master that instrument, you will know when there are changes. For example, the instrument I trade, some certain things changed with the instrument last week. I noticed there was a change. The kind of movements I would normally see, I didn't see it last week. So after trying to get setups, actually I got some setups early in the week. Then later in the week, I just stopped trading. I said, you know what, I'm not going to trade again till next week, which is this week. Then I said, okay, when this week comes around, I'm going to first of all look at the market, monitor the market, and see if the market has restored to where it was before, which means it started operating the way I expect it to operate. You know, so that's the way you want to look at. When you follow one instrument, you will know when things change. You will know when you need to make adjustments as well. But if you don't follow one instrument and you try to follow 10, you will not know that something has changed. What you traded last week that made money for you, you could try to trade it this week and it doesn't make money. You're like, this thing is supposed to work. You don't know that something's changed. But usually when something changes like that, in the way the market is moving or in the way that instrument is working, is probably temporary, right? But you need to follow that instrument long enough to be able to understand the dynamics, what's going on there, what's happening there, okay? For example, let's take Euro USD, for example. Let's take Euro USD, for example. Let me clear out this entire chart, okay? So this is Euro USD, and this is 1 hour chart. Let's go to the 4 hour chart. Right. So now when you come on this 4 hour chart, this is Euro USD. The first thing you have to understand when trading Euro USD, I'm going to use Euro USD as an example. And like I said before, this is an analysis just to help you illustrate how you may trade. okay? How you may do your own trading, right? Because see, what we do in this market is we are trying, that's why we are doing classes every week. Those classes every week we're doing, the goal is for us to help you understand. Sorry, let me try to close this YouTube. YouTube is, where is it, YouTube? WhatsApp, okay, WhatsApp. Okay. Right, so and the goal is for you to help you understand the market so you will know what to do. You will begin to build yourself up. If you want to make the kind of money that you are dreaming of, most traders have dreams of what they want to do, of what they want to achieve, or the kind of money they want to make because they have been inspired by another trader. They've been inspired by another trader, right? Because you've been inspired by another trader and you are looking to make the kind of money another trader makes, right? Or you're looking to make the kind of money someone else is making or make more than what someone else is making. It is entirely possible in this market. You can make any amount of money you want to make in this market. You can make millions. I mean USD. You can make hundreds of thousands. You can make tens of thousands of dollars in the market. It is real. But the only thing is that, will you master the market long enough to know exactly what to do? So there are people who are in several groups. There was a particular group I was seeing today, how some people were making noise about, it's actually a group I was added to give training to them some time ago. Okay, so I was looking at the group today and I was like, usually I don't really look at the group like that because I don't really do much on that group right now. So I was looking at it and some people were arguing over signals. Oh, what is the best signal? What is not the best signal and all of that. If you want to take this from me, guys, if you want to make good money from trading, if you want to make the kind of money you are dreaming of making from trading, it's not going to be from signals. Is the truth. It's not going to be from signals. It's going to be from you sitting down yourself, understanding the market, mastering the charts, and being able to pull money from the market by yourself. You can start by taking signals. You can start like that. It's not bad. There's nothing wrong with that. But then if you're starting like that, you have to know that that's not the way you're going to stay. You're going to constantly improve. You're going to do all you can to constantly improve. When you constantly improve, that's the only way you can grow, right? When you constantly improve, then you'll be able to do well. But if you don't constantly improve, and then you think you just, there are people who come to me all the time and they say, oh, I need money. Someone messaged me the other day. He said he needed, he funded some money, he lost some money, and then the money he lost is very big to him. It was not a lot of money, but it was a lot of money to him, right? That is talking about several things. Oh, signals, he doesn't understand this and all that. I'm like, how many classes have you been into? How many classes? Of the classes I've done, how many have you attended? Guess what, guys? He has not attended one. He hasn't attended one of my classes, one. And he hasn't not just attended one, he has not even gone back to watch the classes. Right? He hasn't gone back to watch the classes, but somehow he thinks that he needs magic money. He needs money so much. Like I was looking at him and I was like, what are you doing? You don't have the time to attend a class. You don't have the time to go back and watch the class. You don't have time to sit down and do your analysis and understand the class and then use it to begin to practice. I've said it before. This chart you are seeing, guys, it's 90% practice. No matter how much you learn, if you don't sit down, if you think that there's one trader, one superstar mentor who will just do everything for you, then it's a mistake. When he teaches you the concepts, even if it's one concept he teaches you, just one, and you decide to take that one concept, understand it well, practice it so well, he will be shocked at the result you will get. He that taught you will be shocked at the result that you will produce. from that one approach, one strategy he taught you. You will use it so well to make money that he that taught you will be wondering, like, what is going on? That's the truth. That's just the truth. But if you decide, if you don't spend that time, if you don't spend that time to do that, then no progress can't really be made like that, right? The reason I'm saying these things is that I want us to understand it. I've said this several times before, but you find out that a lot of people are not so committed to trading. That's why you see big time traders that trade a lot of money. They focus a lot on learning because they know that you need to get a certain level of knowledge for you to make the good money. But if you don't have a lot of money, that is why you should be the one to sit on the charts. So if you have a lot of money, you know that you don't want to waste it, so you want to learn. But if you don't have a lot of money, now that's the way to prepare, because you can take your $50 and enter a trade and make $200 on that trade. But the question is not whether that's possible. That is not that difficult actually to do. But the question is, do you know how to do that? The difference between you and someone who is doing that is the know-how. Do you know how to do that? If you don't know how to do that, then you will not do that. You see? So that is the point. Knowledge is the most important thing in this business, right? So that's it. That's my quiet rant, right? So now when you come into this is Euro USD, and then you want to be able to, trade off of, maybe you want to do either day trading or you want to do scalping. Okay, you want to scalp. When you want to scalp, most of the time, your best strategy for scalping, your best strategies for scalping are to trade around support and resistance. That's your best strategy for scalping. Not even to use an indicator strategy, because an indicator, the thing with using an indicator is that an indicator is a lagging indicators are usually lag the market. Now, what do we mean by lag? It means that an indicator will not read the market properly for you until the thing you want to even trade has already happened. And then when something else, and the indicators has a tendency to give you wrong reading in the short term. The indicators have the tendency to give you wrong reading in the short term. Let's say you're trying to trade on the 1 hour chart or 15-minute chart, and you're trying to use an indicator that tells you to buy or sell, stochastic, oscillators. You're trying to use oscillators like stochastic, like MACD, like relative strength index and all that. You're trying to use those things to trade. So the thing is that if price is making a huge buy, even if price is making a massive buy, and you should be, usually what you are looking for in an uptrend is buy opportunities. We said that before. When you're in an uptrend, you look for buy opportunities. When you're in a downtrend, you look for sell opportunities. When you're in an uptrend, you look for buy opportunities. When you're in a downtrend, you look for sell opportunities. Okay, so but when you are using an indicator, we're using oscillators, and oscillators are basically indicators. Now, when you are using those indicators, price can be in an uptrend, but after a little while, the indicator starts telling you to sell. They start to tell you to sell. Oh, sell. It starts telling you overbought, start to sell. Overbought, start to sell. Overbought, start to sell. And if you are following that indicator, the tendency is for you to get it in some cases, in many cases, the tendency is for you to get into a wrong trade. Indicators are best when the market is not trending. But look at this chart right now. When you look at this chart right now, you will see that at a point the trend wasn't much, but really it has been trending. This is 4-hour chart. So if you are seeing a trend on the 4-hour chart, it means that the market is trending. Right? You can see this downtrend here. Look at this downtrend here, trended down, then it consolidated under here, then it started to trend up. That's the way it is. We said it before. What price does is that price moves from trend to range to trend, from trending to ranging to trending, from trend to range to trend. That's what the market does. So you can see that these days you can hardly find, except some instruments like maybe Euro CHF or something like that. I don't even know. I've not looked at those instruments for a while. Most instruments these days are always trending. So if you are going to bank on, oh, let me trade when the market is not trending, you're going to discover that most of the time you find instruments that are trending. Your instruments are trending. Your assets or your pairs are trending. So when your instruments or your assets or your pairs are trending, you don't want to be using indicators to trade, especially those ones that lag the market. You see, so you want to be able to use price action. You want to be able to use market structure. You want to be able to use support and resistance to master the market so that you can take better trades. So your entries can be better. Your analysis can be better. Your entries, where you are going to enter the trade, can be better. And even if you enter a trade that is wrong, which means the trade is a losing trade, you won't lose too much. You'll be able to lose a little and get out of the market and then be able to get on the next winning trade. Because if you enter a trade, let's say right now, price is going to keep going up, okay? Let's say price is going to keep going up and you decide to sell here. Let's say price is going to, let's look at something. Let's say this price is going to go up. Let's say from here, price is going to go up all the way to this place. Okay, this top now, price is going to go to this top, right? And then you enter for a sell here. Let's say price is even going to go further, it's going to keep going up. You see? So if you enter a sell from here and you are thinking that the price is going to come down, you are thinking it's a sell. And then you enter a sell from here, price keeps buying and buying, buying. You are in a serious downtrend. You are in a serious losing position. So you have to close it. But if you enter at this top right here, the tendency is that because price is still going up, you will still be wrong on that trade. But at least you will see it quickly that you are wrong. And then quickly exit that trade and prepare yourself to get into a more profitable trade. Okay? So now let's talk about some things right here. Let me delete this. Okay, so first of all, when you come on a chart like this, you want to look for where are my support and resistance? Where are my support and resistance? Right? Where is my support and resistance? Where is my support and resistance? Right? Where's my support and resistance? Another way to do it, guys, if you understand how to use Fibonacci, if you have not attended my class on Fibonacci, it's very, very important that you attend the class, or you probably go get that video. It's on YouTube and watch it. It's a class on Fibonacci, how to use Fibonacci to trade. Fibonacci is one of the most reliable, tool that you can use to trade. It helps you to plot support and resistance to a large extent, very accurately, right? So if you are using Fibonacci alone, you may not even bother yourself about knowing where, trying to draw support and resistance and all that. You can just use Fibonacci alone. And whenever Fibonacci tells you to buy or sell, you buy or sell, right? So now you need to, first of all, get your support and resistance in place. Get your support and resistance in place, okay? So when you get your support and you get your resistance in place, you know where price is going to get to. You know where price is going to get to. You know, oh, when price gets here, this is where I'm going to look to buy. When price gets here, this is where I'm going to be looking to sell. Okay, so look at this, this Euro USD right now. Look at where price is. So if you're going to enter this trade right now, if you're going to enter this trade, you're looking to, if I were to look to Euro USD is not an instrument that I trade, right? I trade some other instruments. I don't want to talk about the ones I trade, definitely, because it's not because it's secret. It's just because it's something personal that I trade. So it's not a big deal. It's one of the instruments that are here, one of them here, right? So it's not as if it's hidden. I need to hide it or anything, but I don't want, usually I don't want to draw attention to what I trade because there's nothing special about what I trade. It's just me spending time with it. That's all. So if I could be in a training and I say, oh, this is what I trade. And people say, oh, tell me about that one. It doesn't matter whether you're trading what I'm trading or you're trading anything. It depends on your interest. All that is important is I trade only one instrument here, just one. In this whole instrument right here, I trade only one of them. I don't trade two. Like I said, I can do analysis on all of them. This Euro USD I'm talking about right now, I can trade it very well. But I just decided I am okay with trading one instrument and I don't want to trade more than one, right? That's what it is, okay? So now you look at this now and you're asking yourself, where am I going to buy or where am I going to sell? Where am I going to buy or where am I going to sell? So whether you're doing intraday trading or you're doing scalping, this is going to work for you very well. Where am I going to buy? Where am I going to sell? First of all, if you are trading Euro USD, you also have to keep your eyes on what the dollar index is doing. Okay, so I'm doing this right now. But if you're trading Euro USD, this is going to add to your knowledge base. Okay, if you are not trading Euro USD before and you are interested in trading Euro USD, this is going to be beneficial to you in helping you to really improve your trading. Okay, so now if you are trading Euro USD, one thing you have to understand about Euro USD is that you have to take seriously the dollar index. Look at this dollar index right here, DXY. The DXY is called the dollar index. Now, what the dollar index is a chart of the dollar of the USD itself. Look at it. Here's the chart here. The chart of the dollar itself. That's what the dollar index is all about. It's just a chart of the dollar itself. Okay, so if you have to understand that the dollar has almost an inverse relationship with the Euro USD. The dollar index has almost an inverse relationship with the dollar index. So when you look at dollar index and you look at Euro USD, you will almost see something that is opposite. You will see something that is very close to opposite. In some cases, it is exactly opposite. It's exactly opposite. It's like when you are close to a water body or like a river or like a stream or like a swimming pool or something, and there's a tree beside it. Right? When there's a tree beside it, when you see the tree standing, when you see the reflection of that tree inside the water, what does it look? It looks like the tree is standing upside down inside the water. You see? But the tree is standing. You can sit, you can touch the tree is standing beside the water. But when you look at the water, the reflection of the tree in the water looks like the tree is upside down. Right? That's exactly the picture you have in your mind when you think of the dollar index and the Euro USD. So don't ignore, if you are going to trade the dollar, if you're trying to trade Euro USD, do not ignore the dollar index. Don't ignore the dollar index. And then when you follow the dollar index, you need to then, on a fundamental basis, you also need to know a few things about what's happening with the dollar. Okay, what events are moving the dollar? Okay, so now you don't have to follow every event that's moving the dollar. The major ones: non-farm payroll, CPI, retail sales, FOMC. Those major ones. You just need to know when they are happening, so that because you are trading the Euro USD, you cannot afford to trade Euro USD and ignore what is happening in the dollar. And then also, you also need to follow a few of the things that are happening in the Eurozone, like the interest rates regime in the Eurozone. Whenever the president of the European Central Bank is making a speech that is important to the economy, when they talk about the inflation, all of those things are important when you are following the Euro USD. When you are trading the Euro USD, you want to look at what's happening in the dollar. The most important economic events there. You want to look at what's happening in the euro, the most important economic events there. You see, so all of those things are things you want to keep your eyes on when you are doing when you are trading the Euro USD. And these events I'm talking about do not happen every day. They don't happen every day. They happen once in a while. Non-farm payroll is once a month. CPI is once a month. FOMC is not even every month. Okay, FOMC is not every month. The next time FOMC is going to be holding is going to be in May. I think May 3rd or so. The last one held, I think, last week. Yeah, last week. Held last week. Yes, it held last week. The next one is going to be in May, first week of May, thereabout. You know, so those are the things you just keep. It doesn't happen every day. So your normal technical analysis will still play out on a daily basis, right? But you want to keep your eyes on those just for when they are happening, so that you're not trading and feeling cool and something happens in the market and it disrupts everything for you, and like, you are wondering what happened. Just the same way, if you are trading gold, you also want to keep your eyes on the dollar index a little bit. You want to keep your eyes on the dollar index too, but then dollar index may not be as strong. You may not watch the dollar index so strong if you are trading gold. Right, you may not watch the dollar index so strong because it will only move. The dollar index will move gold only when there's a major event. Gold has a mind of its own, right? But for Euro USD, you have to keep your eyes on the dollar index. Okay, so if you want to trade here right now, you want to look at where am I going to take a trade? Am I going to be buying or am I going to be selling? First of all, let's look. What trend are we on? Are we on a buy trend or are we on a sell trend? It looks as if we've been selling for a while, and then recently the market stalled here, and then it started buying, right? It looks like a buy. Fine. Okay, so let's check something. I want to check something. Use Fibonacci to check something here, right? Nice. Okay, so you can see where this price came to here, right? Look at where price came to here. This is the 50% Fibonacci level, 50%. Okay, so what I did, I took the Fibonacci and I went to this level. I took this level, which is, this is a swing low, this is a swing high. This is a swing low, this is a swing high. I drew it, it gave me the 50%. Look at this green line. The green line is the 50%. That's where it's saying buy from. You see, so if you were buying from there, that's a whole lot of pips. That's probably over 100 pips, right? Okay, fine. That's Fibonacci I was saying earlier. That's why I say if you know how to use Fibonacci, it's a very good tool for you. Okay, so now let's go forward. Let's look forward. How are we going to do this trading? How are we going to do this trading? Now, as a trader, guys, now you may be trading Euro USD already, or you may not be. But this is the way I would trade Euro USD if I want to trade Euro USD now, right? I'm going to wait for price to come to either this area or this area. That's one thing I like. That's one thing I actually like about trading one instrument. When you trade one instrument, that's one of the things, not the only thing. One of the things you gain by trading one instrument is that it teaches you a very important trait that every trader needs, and that's patience. That's patience. It will teach you patience. You will become very patient, because when that instrument happens, when that trade happens, when your trade is setting up, you will just mark your chart and wait for it. You just wait. You know what you are doing. You can go and do other things. You can play around. You can go and do whatever you want to do. You know what's going to happen when price gets to that area that you have prepared. So it plays into, it's like you open your, how do they do this thing? There's something we used to do when we're like kids, right? We could have chicken. We could have a chicken. We're chasing chicken around in the evenings, right? I grew up in a place where you have chickens around, and in the evening you allow them play around, and then in the evenings you open the door and you want them to come inside, right? So when you're chasing them, you can't catch them. Most of the time you can't catch them. So what you do is you open the door where they usually come in and sleep, right? Open it. So when you open it, by themselves, they'll come inside, right? By themselves, you come inside. And even if you chase them a little bit, they'll just run inside that place. Sometimes you even chase them, they will run past the place where you expect them to enter. They'll run past it. They'll run past it. So you are not achieving anything by chasing them. In fact, you are making things difficult by chasing them. But if you just open where they are supposed to enter and then leave the place alone, they will come and enter by themselves. And then what you just go is you go and you lock it. That's exactly what you want to, how you want to approach your trading. You want to mark your zones. You want to tell yourself, this is where price will get to for me to trade. And then you are going to have to set it and wait. You set it and wait. You are not bothered about anything else. You set it and you wait until price gets there. If it takes 1 day for it to get there, fine. If it takes 2 days for it to get there, fine. You are not desperate. You are not. That's the first thing. You have to remove yourself from that mindset of, trading is a daily profit thing. I need to make money today. No. If your setup, you are concerned more about the setup that you have. What's my setup? When my setup is done, when my setup is ready, that's when I trade. If my setup is not ready, then I don't trade. It doesn't matter. So I'm not telling myself I'll make, you've seen people who say, oh, you make 50 pips every day. Once you make 50 pips, you go away from the market. Now, who told you that your setup is going to be good enough to give you 50 pips every day? Yeah, your setup can be good one day and it gives you 100 pips. It gives you 200 pips. It gives you 150 pips. And the next day, you don't get any trade. Or the next 2 days, you don't get any trade. But if you tell yourself that, oh, every day I must trade, every day I must make profit, then you find yourself making mistakes that you probably shouldn't make because you've given yourself a mindset. But when you tell yourself that, see, the market is just like the illustration I usually give is, let's say you sell real estate, right? You sell properties, you sell lands, or you sell houses. Every day you go out, you prospect, you talk to clients, you talk to potential clients, you talk to prospects, you're talking to people, you're sharing on social media, you're doing your marketing and your marketing activities for the properties that you sell, right? But you're not going to wake up today and say, hey, I must sell 1 property today. I must sell 2 properties today. No. You just continue to do your activities and talk to clients and bring them to see the property or share the property details with them. Oh, the property is a house. It has 3 rooms. It has 5 rooms. All you need to do is show them. Then maybe after showing for 3 weeks in a month, you get a sale. And that sale is big. Maybe someone just paid for a house. That's the way it's done. When you make that money, that money doesn't say, oh, I should have, you don't say, oh, I should have been making a sale every day. There are different kinds of businesses. So trading, what you want to do is that you want to come to the chart, analyze the chart, just the way that salesman, that property salesman goes around to do his prospecting and everything. You analyze your chart, you wait for price to happen. You wait for price to get to your place where you're supposed to enter the trade. If it doesn't get there, you're not trading. If it gets there, you could analyze your trade and within a short time, your trade triggers, you go there, you take your profit and you are out. That's it. If it happens every day, fine. If it doesn't happen every day, perfect. Okay? So that's the way it is. So here now, what you want to do is that what I would do in this trade is this. I have seen 2 areas, this area and this area. This area that has a blue strip is a resistance level. This area is a support level. For me, what I will be looking to do here is very simple. I want price to get to this area and give me a price action. Give me price action that tells me, first and foremost, remember I said, keep your eyes on the dollar index. Keep your eyes on the dollar index. You are trading Euro USD, keep your eyes on the dollar index. Because if the dollar index, if something is happening in the dollar, when price gets here, this place will not hold. It will not hold price. The goal now is when price gets here, price is supposed to come down, right? Price is meant to come down, or if it comes here, it's meant to go up, right? Now, that's what you are expecting to happen. But if something happens with the dollar at that time, when price gets here, it most likely breaks out and continues going up, right? So, but what I want to do is I want price to come to this area and I will wait to see an engulfing candle or some kind of a pattern. Look at this point right now. Can you see this? Look at this red candle that has a long wick on top of it. That is what you call a shooting star. That's what you call a shooting star candle pattern. That's what you call a shooting star. This candle pattern is a reversal candle pattern. is a pattern that tells you that price is likely going to sell. Then look at this other one here, right? Look at this other one. This one is what you call a bearish engulfing. So these two patterns right now happening around this area gives you an idea that price is likely going to come down, continue to come to this area. You see? So now, if you are scalping and you enter this trade after you saw this, you see this shooting star here, this candle that has a long wick. If you entered your sell after that one happened and price kept coming down, you see the kind of profit that you have made there, whether you're scalping or you're a day trader. So what I will do is that I will wait for price to either get to this point or get to this point, whichever place it gets to first, fine, doesn't matter. What I want to do is that when price gets there, I want to see a pattern like this. I want to see either a shooting star, an engulfing candle, or something bearish engulf, something that a price action that tells me that price is going to reverse from here. That's what I'm going to be looking for. Price action, I already know that this is a resistance. And what does price do at a resistance? Price will most likely be suppressed at a resistance. So price will drop off of a resistance. Price will sell off at a resistance. Price will likely sell off at a resistance, but it's not guaranteed. It doesn't happen all the time. Because in as much as price can sell off here, price can also break out of here. So I don't want to get caught up when price breaks out of here. That's the reason why I want to see a clear price action pattern, a clear price action pattern that tells me that price is going to reverse from here. When price reverses, when I see that clear pattern, I will enter a sell and I'm expecting price to come here. That's it. And I'll make that profit. Okay? So that's how we trade this. If price doesn't, as price is here now, if price doesn't go out to this place and it start coming down here, no problem. I'll just wait for this area. When price gets here, I want to see price action that tells me that there's going to be a buy. And price action, by price action, I mean your candlestick formation. Price action is equal to candlestick formation. How the candle in that area, how did it form? Every candle you see on this chart tells you, gives you a pattern, gives you a story as to what is likely to come next, right? As to what is likely to come next, not guaranteed to come next, but likely to come next. So that's what you want to do. I want to look for, wait for this to happen, and then I'll buy from here. So, and here's another thing I'm looking at. There's something that we are going to talk about. We've not had a class on it yet, but I'm going to have a class on it. Is what you call the M pattern. The M pattern. Okay. So an M pattern is also a reversal pattern where price comes down like this. You can see M. Can you see M? Look at it here. One leg, another leg, and then M pattern. Can you see that M? So M usually will give you what you call a double top. Double top. So what is going to guarantee this for me is that, yes, I know that this is possible to happen, but it's not guaranteed. So what I would like to see around here is that reversal pattern. I need to see candlestick pattern that shows me that price is going to reverse from here. And that candlestick pattern needs to be a bearish candlestick pattern. A bearish candlestick. If you're not understanding me, or you like to understand this more, I did 2 or 3 classes on candlestick patterns. Okay, so it's in the group, or it's on the group, or and it's also on the YouTube channel where you can find it. Now, those videos on that YouTube channel, I'm going to be migrating them to our Vantage Markets platform soon, right? So, but you can still watch them on that YouTube channel right now, right? So I did trainings on how to identify those reversal patterns, bullish and bearish engulfing, shooting star, hammer, and all of them. There are several of them that are very, very important. And also within the group there, I also shared they call it the Candlestick Bible that contains all of this information. I shared it in the group as well. So I want to see that reversal pattern here. I want to see either a shooting star or a bearish engulfing, or both of them. I want to see them here. I want to see a pattern that gives me an idea that price is going to come down from here. When price comes down from here, that will mean that price is giving me a double top. That's what you call a double top. A double, there's a top, then there's another top. That's a double top. So when I'm combining things, I'm looking for, this is what you call confirmation in trading. Confirmation. So I'm looking at number one, I'm looking at an M pattern. M, this is one leg of an M. This is the middle of the M. This is another leg of an M, right? This is an M pattern. So I'm looking for number one, I'm looking for an M. I'm looking at an M pattern. Number two, I'm expecting a double top here. Okay, the double top here. I'm looking at an M pattern. I'm looking at a double top here. You see? So then what I now want to see there now, I want to see a pattern like a shooting star or a bearish engulfing or some kind of a pattern that tells me that price is going to pull back from here. And then this will now play into my narrative that I've already seen happening. And then I'll be expecting to then sell off from here. Sell from this point, probably down to this area again. Or at least down to this area. At least down to this place. But it's likely to come down here. Right? So this is how we trade this particular pair right now. This is how, we don't have much time. This is how you want to do analysis of the pairs that you are trading.